So there's 1,000 videos about how you should trade NASDAQ or what strategy you should use. I've got one specific video on things you should keep in mind and not to do when you trade NASDAQ. Let's get into it. Yo, what is up YouTube? My name is Vikas and welcome to the Week Trading channel. As I mentioned, I have a list of 8 things you should not do when trading NASDAQ. Things you need to keep in mind, and it's things that hindered me in my process when I started off. Today, I'm a profitable trader and it excites me to share this information with you and help you become more profitable. Let's start off with number 1. So when I started off as a forex trader, I was super excited about it and I wanted to share the information with everybody. I wanted to share with my friends and my family. But the problem was the majority of the responses that I got was that I am just gambling. And that frustrated the hell out of me. And it can be correct. It depends on how you trade. But here is the tip. Do not enter the market if you don't have a complete setup planned out. If you enter the market without a complete setup planned out, you are just gambling. And without them knowing it, they were correct. So at that stage, while I was inexperienced, I didn't understand it. But now that I'm an experienced trader, I know that if I don't have a complete setup planned out in the market, I am just gambling. So make sure that all your trades is planned out. That means your entry, your stop loss, and your TP is planned out why you are entering there and when you are entering there. Make sure about that. Tip number 2, do not look for reasons to change your setup, your trading setup, your plan after you've completed the initial plan. If you've got your entry set out, you've got your TP set out, you've got your stop loss set out, stop analyzing the market, as you will start to overthink what the market is showing you. And that will change your plan at the end of the day and create you to lose trust in what you've already set out. Believe in your setup, believe in yourself, and believe in the ability that you have to plan out a trade correctly. So stop analyzing the charts after your plan has already been set out and stick to it. Tip number 3, do not stick to one specific time frame. So when I was a part of several Telegram groups or WhatsApp groups with other forex traders, one of the key questions that traders ask is, what time frame did you see that on? Especially when someone shares an analysis or their opinion of what the market is doing. The problem with that is that the market shows trading setups on all time frames. You've got setups on the weekly, the daily, the 4 hour, the 1 hour, even down to the 1 minute. And if you stick to one specific time frame, you will miss out what the other time frames are showing you. That doesn't mean you need to bombard yourself with looking at all the time frames. What you can do is work with 3 to 4 different time frames when you analyze the market. If you're a scalper, look at the 1 minute, look at the 5 minute, look at the 15 minutes, and maybe the 1 hour or even the 30 minutes to give you an idea of the momentum in the market. If you're an intraday trader, you would most likely want to use the 15 minute, the 1 hour, maybe the 4 hour, and the daily, as I do. And if you're a swing trader, that I also like to do, I look at the weekly setups, the daily setups, the 4 hour, and then gauge for my entries on the 1 hour. So use several time frames to gauge your entries and to gauge your structure in the market and plan it out. Tip number 4, do not overclutter your chart with indicators. Indicators can be a very helpful tool in the market, but it can also cause you a lot of damage in the market. Cluttering your chart with too many indicators at one time can literally cause you to not see the structure of the market and also the structure of the candles in the market. And that is the most important thing, is to stay focused to what the structure of the market and the structure of the candles are showing you. Also, when you use too many indicators, those indicators can literally tell you different stories. The one indicator can tell you that the market is going in for a buy, and the other indicator can tell you that the market is going in for a sell, and it will leave you confused at the end of the day. So stick to 1, 2, or 3 indicators just to help you gauge that perfect entry into the market, but focus mostly on the market structure and the candle structure in the market. So do not clutter your chart with indicators. So the same thing when it comes to charts, it comes to your mind. Do not clutter your mind with too many trading strategies, especially if you're a beginner trader. Focus on one specific strategy and get yourself successful with that strategy. It's the same concept of looking at a pilot. When a person wants to become a qualified pilot, they have to go and read the books and learn the theory, but also they have to put in the hours of flight time before they can get qualified. Now, how do you expect to become a successful, profitable trader by only going through the theory of Forex and not the flying time of trading Forex? That is the important aspect that a lot of new traders forgets about or do not even realize. The amount of hours that we put into the market overshadows the amount of hours that we took to learn the theory of how to trade. The experience that we have in the market is much more than the time we spent of understanding what the theory is about. So put in the hours, learn how to fly the strategy that you've already learned, succeed in trading that strategy until you become a profitable trader, and then add more strategies to yourself and your trading style and become more successful. But the point is, do not clutter your chart with too many strategies. Get one strategy, focus on it, perfect it, and move on to the next one after that. Tip number 6, only trade what you understand in the market. It is easy for us to get into a trade because we literally just have to press a button, but understanding why you pressed that button or why you jumped into the market is the key thing for you to know. Trade only the areas that you understand. When the market is trending, when the market is consolidating, when the market is literally just moving in a straight line. If you do not understand what the market is doing at that stage, stay out of the market and wait for the market to move into a momentum that you already understand and you've already got experience in trading. So do not trade what you do not understand. Stay out of the market and trade only when it's safe. Once again, you don't want to be a gambler. You want to be a successful Forex trader. Tip number 7. Stay away from news events if you're not an experienced trader or do not know what you're doing in the market. When we look at the first Friday of each month, it's called NFP, non-farming payrolls, and that has a massive impact on NASDAQ. Sometimes even causes NASDAQ to move thousands of pips. And the problem with that is if you're not an experienced trader, you would not know what to expect when the news drops. There's a lot of predictions that comes in beforehand, and those predictions might give you accurate ideas as to what the market can do, but it will not always be correct because the banks and the hedge funds use those news events to their advantage as well. So it impacts the market in two separate ways. The news impacts the market with the actual news that has dropped, but the banks and the hedge funds then uses that news to manipulate the market and catches out the people that wants to follow the market with the news that has dropped. So be very wary of trading around news events. Be safe and do not trade if you're not an experienced trader around those news events. Tip number 8, and in my opinion the most important tip of them all. One of the key lessons that my mentor told me is trade what you see and not what you feel. And what that comes down to is do not trade with your emotions. When you trade and when you look at the charts and you analyze the chart, leave your emotions out of the room and focus on what you see. Trade what you see and not what you feel. When you take a trade and the trade has hit your stop loss, and you are now frustrated or sad or down about it, leave the emotions out of it. Do not jump back into a trade just to revenge trade and try to make your losses back. That is your emotions speaking and not the market showing you what the market is going to do. So do not trade with your emotions. Stick to your plan, stick to what the market has showed you, and if you're wrong, take a step back and focus and relax, and then analyze the charts again and get into the correct trade and make your losses back with more profits. So there you have it, my 8 tips of things you should not do when you trade NASDAQ. Trading NASDAQ can be a very tricky thing, but can be a very profitable thing. And when you use those 8 tips and you work them into your trading style and trading strategies, and you keep them in the back of your mind and use it to guide your way through things you should not do, you will most probably become a successful Forex trader or NASDAQ trader. I would like to thank you for watching this video. Thank you for clicking on it. And if you like the information that I shared with you, please click on the like button, the subscribe button, and share the video with friends and family that you also think could use the information. Also, if you want more information about the Wick Trading websites, the courses that I offer, as well as the Wick Trading copy trading group and signals group, you can click on the website link below in the description, and I will see you there. Thank you for watching. I'll see you all in the next one. Cheers.